know, just over the last couple weeks, is I've just been watching the overall markets, the Dow Jones in particular, but today I noticed a little bit interesting thing. It happens every now and then where uh, maybe two of the markets or two of the indices remained positive, but the Nasdaq did not. It was negative uh, basically from 12 p.m. on, and so that can just mean, from what I know about it, that uh, any positives up here uh, may not, stay or remain upheld. Not all the time though. Sometimes the markets will all react upwardly from that. Just something to kind of be noticing. Right now we can see here that tech stocks are kind of cheering the Apple news, so we might see some more positive tomorrow. Whether it's positive I'm buying yet or not remains to be seen. Let's take a look at the Dow here, and if we look at the 1 month chart, okay, we're still seeing 8 below the 21, but it's converging there. It's starting to kind of join. It'll be interesting to see if this W pattern continues upward, or if it immediately flips and goes to an M pattern, kind of like that one did there, but now we're doing the W. Looking at the 3 month, we are seeing convergence on the 8 and the 21 there. So that might just indicate that we might kind of be oscillating around here for a while. So might be worth taking a look at some particular stocks if you're looking at getting in. Let's take a look at one last thing here. As you know, I've been tracking this fund here. Once again, we're down slightly today, but it's been down the last couple of days. So basically, if we look at this chart here, we can see that right about here. So July 6, 2009, we were at 3360, and the moving average for the 8-day was at 34.56, and the 21 was at 35.51. So we were in kind of a downtrend there, and probably just starting to break out of it. As you can see, based on today's levels that we hit, that's basically our floor there. Historically, we've broken all the other floors. Just something I'm looking at here is we are not seeing convergence on the 8 and the 21. They're still running strongly opposite of each other. So definitely not buying in here yet. But I'm not the only one that's noticing the fact that these funds are just getting slaughtered, and the indexes that track gold mining stocks and stocks involved with the gold industry are just getting hammered. Yet gold continues to stay relatively stable for the most part. Take a look at the chart. We're still at 1641. Okay. So let's take a look at the 30-day. We've been trading kind of in this range here of 1680 and 1620. So we're right in the middle of that. Go to the 60-day. So we plunged out of the 1700s. Now we're in 40, 60 range. Okay. So we have taken a dive on gold as far as the metal is concerned, but it is interesting to see that the gold stocks are just killed, which may be a buying opportunity here. Let me show you an article I was looking at today. Here's one reason why I'm still kind of following these gold funds. Looks like I'm not the only one that's kind of seeing kind of an interesting play here that might bring some good profits. We'll have to see, but basically this article here appears on the miniweb.com. It's called Gold Oil Stocks Present Rare Opportunity. So we just take a look at this. Basically the summary is that you have the commodity itself, which would be gold or oil, and you have the stocks of companies that are involved in those commodities, and we're seeing some divergence big time between the indexes that track the commodity as compared to the indexes that track the businesses involved in that commodity. And we're seeing the same thing for gold and for oil. So basically what we're seeing here for gold is the blue line, that's all the gold stocks of companies involved, and that the yellow line is gold itself. That's a big time divergence. Okay. And so what's going to be interesting to see is if gold is going to come down and meet the gold stocks in the middle, or if this is going to come up and meet gold, kind of like we've seen it do in the past. The article goes into more depth of how much the ratio, the standard ratio is, but right now we're at 13.3 standard deviation for oil, and we're at a 3.06 standard deviation for gold. So it'll be interesting to see. Now, historically, according to this chart, the gold stocks outperform or are above the trend line for gold bullion. So it's interesting to see bullion above these stocks. So I mean, we could be seeing quite a bit of upside. It's just going to depend on the market. I'm not going to be buying in until I see a reason to. And for right now, I'm not seeing money moving into those funds. So I'm just going to sit and wait, but looks like the springs are getting loaded there. Another interesting good thing to just kind of note is that these gold stocks most of them do pay a dividend, and so it might, I mean, depending on the circumstances, I might start to kind of snitzel into it, see if, just let that dividend kind of pay its way, kind of thing, and just kind of see where this goes. But yeah, I'm not quite sold yet that this thing isn't gonna go down a bit more. So just gonna kind of wait on those moving averages to kind of give me a better indicator. So that about wraps it up for today. Let me know if you got any questions or comments, or if you think I'm just totally off base. Thanks a lot.